Hello viewers at home. You are welcome to my presentation on cash budget. Cash budget. In this presentation, I will be explaining how to prepare the cash budget, and I will also explain those items that will be incorporated in the cash budget and those items that should not be in the cash budget. I will also solve questions as work example. What is a cash budget? Cash budget shows the forecast cash inflows, that is cash receipts, and cash outflows, that is cash payments of an organization over the budgeted period. Cash budget shows the forecast cash inflows and cash outflows of an organization over the budgeted period. Cash budget or cash budgeting is designed principally to stave off liquidity problems. It is designed to stave off liquidity problems. So the following items that should not that will not be entered in the cash budget. Items that will not be entered in the cash budget. The following items should not be recorded in the cash budget. Number one, credit purchases. Credit purchases. Credit purchases will not be entered in the cash budget. Remember, your cash budget is prepared in line with cash basis of account. It is prepared in line with the cash basis of account, not accrual basis. Meaning that you will record the transactions when they are received. You record revenue, or you record revenue when they are received. Then you record expenditure when actual payments are made, or when payments are made. Revenue should be recorded when they are received, and expenditure will be recorded when they are paid in the cash budget. Non-cash items should not be entered in the cash budget. So credit purchases should not be recorded until cash is paid for them. Until cash is paid for them. Number two, credit sales. Credit sales should not be recorded until cash is received. Non-cash items such as depreciation should not be recorded in the cash budget. Where expenditure include depreciation, such depreciation should be removed or deducted from the expenditure. So number four, amortization. Amortization should not be entered in the cash budget. Number five, we have impairment laws, where an asset is impaired. Impairment laws, that is the carrying amount of the asset exceeds its recoverable value. The dividend proposed. Dividend proposed should not be entered or recorded in the cash budget, but dividend paid will be recorded in the cash budget. You should record the dividend paid, but dividend proposed should not be recorded. Number 8, appropriation of profit, such as transfer to reserves. Transfer to reserves or revaluation reserves should not be entered in the cash budget. Then we also have allowances for receivables. Allowances for receivables. that is your provision for bad or doubtful debts, should not be entered in the cash budget. Bad debts written off. Bad debts written off. Bad debts should not be recorded in the cash budget, but bad debts recovered will be recorded. Bad debts written off should not be recorded in the cash budget, but the bad debts recovered should be recorded when they are received. 11. Loss from disposal of an asset. Loss from disposal of an asset. Loss from disposal of non-current assets should not be recorded in the cash budget. 12. Profit from disposal of non-current assets. Profit from disposal of non-current assets should not be entered or recorded in the cash budget. I've given you those items that will not appear in the cash budget at all. Where the expenditure to be included in the cash budget contain those items, we are going to remove them from the items of expenditure where they have been included. You remove it from those expenditure before actually recording those expenditure in our cash budget. I've told you that cash budget is prepared in line with the cash basis of account. So on the basis of that, I will give you the format for preparing the cash budget. Format. I want to assume that the budget period or budget period is January to March, January, February, and March. You are going to start with the item of receipts. You are going to start with the receipts. Your receipt could involve receipts from customers. Receipts from customers. When you make sales on credit, the amount you receive from customers, you are going to have it here under receipts. Then proceeds from sales of assets. Proceeds from sales of non-current assets. It is the proceed. You don't record the carrying amount, and you don't record the accumulated depreciation relating to the asset sold. Let me assume the asset is sold in the month of January, and this proceed was received in January. The budgeted period have to be specified in your title. So your title, the period will be specified. Then we also have dividend received. Dividend received. The dividend you receive from your investment, I want to assume it is received in February. That is why I put it under February. Then commission received. Commission received. I want to assume the commission were received in the month of March. Then grants received. Grants received. Let's assume the grant is received in January. Other receipts. Any other forms of receipts you have. So you put it in the month they were received. So you now sum up your receipts. When you sum it up, you have total receipts. Let me have our receipts to be A. Total receipts for the period. After receipts, you have payments. After receipts, the next thing is the payments. The payments may include salaries. The salaries paid. You may have purchases of non-current assets. Purchases of assets. Let's assume the assets were bought in February. Then payment to suppliers. To suppliers. The amount you pay to supplier for the purchases. Then interest paid. Please subscribe to this channel so that you'll be receiving notification each time more lectures are added. So be expecting more from me from time to time. Then we have dividend paid. Let's assume the dividend were paid in February. Taxes paid. I want to assume the taxes were paid every month. Then rent paid. Rent paid every month. Administrative expenses paid. Those information will be included in the cash budget on the basis of their time lag. That is when there is receipt of payment. Selling expenses paid. So now where these expenses include depreciation, as I've said earlier, you are going to remove your depreciation from those expenses or any of those items. I told you that they will not be included in the cash budget. Where those items are included in any of these expenses, you have to remove their impact or effect from those amounts. So total payments, let me have that as B. After total payments, you have net cash flows. That is A minus B. That is your receipt, your total receipt. Total receipts minus total payments. That will give us the net cash flows. The opening balance will be given in the question. Opening cash balance. And where it is not given, you put dash. So I'm assuming it is given. When you add the opening balance to the net cash flow, you get your closing cash balance. I've told you that your opening balance here, I'm talking about opening cash balance. You get the closing cash balance. The opening cash balance for January will be the closing balance. I mean, for January will be the opening balance for February. When you add it, you get the closing balance. Then the closing balance for February will be the opening balance for March. And when you add that, you get the closing balance. So that is the format for preparing the cash budget. I want to take questions as work example. This question is taken from the past examination questions of the Institute of Chartered Accountants of Nigeria, Ezikan. Example: the following information relates to Korogbe Industries Limited. A. Budgeted profit and loss accounts for year 2020. You are given January, February, March, April, May, and June. Everything are in thousands. You are given sales of 90, 92, 88, 95, 90, and 94. Then you have less purchases: 54, 56, 50, 60, 52, and 55. Then you have gross profit: 36, 36, 38, 35, 38, and 39. Then you also have less operating expenses. Then selling expenses 10, 12, 13, 16 and 15. Distribution expenses 6, 4, 5, 7, 4 and 5,000. Administrative expenses 3,000, 4,000, 4,000, 2,000, 5,000 and 3,000. Then net profit 17,000, 16,000, 16,000, 13,000, 13,000 and 16,000. B. Sales for November and December 2019 were 85,000 naira and 90,000, 85,000 naira and 90,000 respectively. C. 40% of sales will be in cash. 30% each will be paid in 30 days and 60 days. D. Purchases of November and December 2019 were 48,000 and 50,000 naira respectively. E. 75% of purchases will be paid for immediately and the balance after 2 months. Selling expenses are to be settled in 2 equal installments after 30 and 60 days. G. Distribution expenses are payable 1 month in arrears, while administrative expenses are payable immediately. H. Distribution expenses for December 2019 will be 5,000 naira, while selling expenses will be 8,000 naira for November 2019 and 9,000 naira for December 2019. I. Balance in the bank on 31st December 2019 is expected to be 36,000 naira overdrawn. J. The company intends to pay the following: 1. Company tax of 12,000 naira in February 2020. 2. A new generator costing 6,500 naira in March 2020. 3. Dividends of 20,000 naira in April 2020. K. Some unserviceable parts will be sold in January 2020 for 8,000 naira. You are required to prepare the cash budget for the first 6 months of 2020 for Korogbe Industries Limited. This question is obtained from Ezikan past examination questions. Ezikan questions modified. Now, solution. We have Korogbe Industries Limited. Korogbe Industries Limited. Cash budget. Cash budget for the first 6 months. First 6 months of the year 2020. So the first 6 months of year 2020 is January to June. January to June. This is for May, April, March, February, and January. We have January, February, we have March, we have April, May, and June. You may also include the column for total. You may include the column for total. After that, in your cash budget, you start with the items of receipts. You have receipts. You go through the questions. What are the items of receipt given in the question? Go through the question. So, we have sales we are given sales of 90,000, 92,000, 88,000, 95,000, 90,000, and 94,000. After that, all these items are on credits, and information will be entered in the cash budget when there is actual receipts or payments of cash. That means this amount will not be entered in the cash budget until there is a receipt or payment in cash. So let's have working one. Now have cash received from customers. Cash received from customers. Now we have for January to June, May, April, March, February, and January, year 2020. This is year 2020. In year 2020, in the month of January, the sales made was 90,000 and 92,000 for February, while we have sales of 88,000 for March. So we have sales. Sales, January 90,000, February we have 92,000. March 88,000 in year 2020. Then April, you have April, May, and June. In the month of April, the sales made is 90,000. In the month of May, we have sales of 90,000. In the month of April, we have sales of 95,000, May 90,000, and June 94,000. Then April 95,000, May 90,000, and June we have sales of 94,000. After that, transactions will be entered in the cash budget when there are receipts or payment of cash. Note B. Sales for November and December 2019 were 85,000 and 90,000 respectively. You are given November and December 2019. December 2019 and November 2019. You are given sales of 85,000 and sales of 19,000 for November and December 2019 respectively. We now have cash from customers now. Cash from customers. Let's go through the notes. Note C. 40% of sales will be in cash. 40% will be in cash. That means 40% will be received that same month. 30% each will be paid in 30 days and 60 days. That means the 30% will be paid in 30 days and 30% will be paid in 60 days for credit sales. Now, cash sales 40%, which will be received the same month. The one that will be received in 30 days time. For credit sales, that is 30% also. The one that will be received in 60 days time. 60 days. And that is also 30%. If you have 40% plus 30%, that is 70%. And if you have 70% plus 30%, that will be 100%. Now, if it is cash, 40% will be received the same month. That means 40% of 85,000. The sale that was made in November, 40% is 34,000. This 34,000 will be received the same month, the month of November. Then 90,000 now. 40% of that is cash sales. We have 36,000. Then 40% of 90,000, 36,000. 40% of 92,000. That will give us 36,800. 40% of 88,000. And that will give us 35,200. These are cash sales. 40% of 95,000. And that will give us 38,000. 40% of 90,000, that will give us 36,000. And 40% of 94,000. 40% of 94,000, and that will give us 37,600. The cash sales will be received that very month the sales were made. Then 30% will be received in 30 days time. That means 30% of November sales will be received in December. 30% of December sales will be received in January. 30% of January sales will be received in February, in that order. Okay, that of November sales, we have 85,000. 30% of 85,000, we have 25,500. Since the sales was made in November 2019, that 30% will be received in December 2019, which is 25,500. Then for December sales, which is 90,000, 30% of 90,000 will give us 27,000. That of December sales, 30% of it, which will be received in 30 days time, that means it will be received in January, which is 27,000. 30% of January sales will be received in February, and the January sales is 90,000. 30% of 90,000 will also be 27,000. For February sales, the February sales is 92,000. 30% of 92,000 will give us 27,600. 27,600. The March sales is 88,000. 30% of 88,000 is 26,400, and that will be received in April, which is 26,400. For April sales is 95,000. 30% of 95,000 is 28,500. And that 28,500 will be received in 30 days time, which is the month that follows, which is 28,500. For May sales, the May sales is 90,000. The sales that was made in the month of May is 90,000. 30% of 90,000 is 27,000, and that will be received the month that follow, which is June, and that will be 27,000, which will be received in the month of June. That of June sales, the June sales is 94,000. 30% of 94,000 will be received the month that follow, which is July, and the July 2020 is outside our budgeted period, so that will not be considered. Now back to November. 60 days sales, 30% of whatever sales you make in the month will be received in 60 days time. For instance, the sales that was made in the month of November, 30% of it will be made in 60 days time, which is 2 months time. 2 months after November 2019, you have December 2019 and January 2020. That means 30% of the sales that was made in November 2019 will be received in January 2020, which is 2 months after that November, and that is 25,000. That is 30% of 85,000. That is 25,500. Then the sales that was made in December 2019, 30% of it, the sales is 90,000. 30% of it is 27,000, and that will be received 60 days time. The 60 days after December will be, you have January, which is 30 days, February is another, making 2 months after. So that means the 30% of December 2019 sales will be received in February 2020, and that is 27,000. Then the sales that was made in January 2020, 60 days time now will be March. That means the 30% of that will be received in March 2020. So we have 27,000. The sales that was made in February 2020, the 60 days after February we have March, April. 60 days after February will be the month of April. So 30% of 92,000, and that gives us 27,600. That will be received in the month of April, 27,600. The sales that was made in March, 60 days after March, we have April, May. That will be received in the month of May. So 30% that will be received. Now, 30% of 88,000, that will give us 26,400. Then for the sales that was made in the month of April, the one that will be received in 60 days time, after April, that is 2 months after, we have May, June. That will be received in the month of June 2020. And 30% of 95,000 is 28,500. So you now sum it up. In order to get the amount of cash you have received from customers for each of the periods. So for June 2020, you have 37,600 plus 27,000 plus 28,500. Then you have 93,100. 93,100. That of May, we have 36,000 plus 28,500 plus 26,400. Then we also have 90,900. Then we also have April, 38,000 plus 26,400 plus 27,600. Then we have 92,000 in the month of April. Then March, you have 35,200 plus 27,600 plus 27,000. Then we have 89,800. Then we have February 2020. We have 36,800 plus 27,000 plus 27,000. Then we have 90,800. Then January 2020, we have 36,000 plus 27,000 plus 25,500. Then we have 88,500. These are the amounts that will be entered in the cash budget for the month of January to June 2020. So we now have cash receipt from customers. Cash from customers. So we have January 88,500. February we have 90,800. Then March we have 89,800. April we have 92,000. May we have 90,900. June we have 93,100. These are the cash you received from customers, that is working one, from our working one. Then you also go through the note, the footnote, to see if there are other cash received. Note B is on the cash received. Sales. Note B is for sales. Note D is for purchases. Note E is also all about purchases. Note F. We have selling expenses are to be settled in 2 equal installments after 30 and 60 days. That is a payment. So it does not involve receipts. So note G. Distribution expenses are payable 1 month in arrears, while administrative expenses are payable immediately. That is also a payment. So note H. Distribution expenses for December 2019 will be 5,000 naira, while selling expenses will be 8,000 naira for November 2019 and 9,000 for December 2019. That have to do with payment as well. Balance in the bank on December 2019 is expected to be 36,000 overdrawn. That is the opening balance. J. The company intends to pay the following. 1. Company tax of 12,000 naira in February 2020. That is payment. 2. A new generator costing 6,500 in March 2020. That have to do with payment. Dividends of 20,000 in April 2020. That also have to do with payment. Note K. Some unserviceable parts will be sold in January 2020 for 8,000 naira. That is sales of unserviceable part. That will involve receipts or cash. Sales of unserviceable part. And that sales will be made in January 2020. And the amount involved is 8,000 naira. Then you now sum up the receipts. Since there are no other items of receipts, in order to have the total receipts for the period, you sum it up. So we have 88,500. 88,500 plus 8,000. The receipts for January is 96,500. 96,500. That of February we have 90,800. Then we have 89,800. We have 92,000. Then we have 90,900 and 93,100. That is total receipts. Total receipts. Let me have it as A. After receipts, the next thing is payments. Payments. So you are going to deal with the items of payments. So we also have less purchases. 54,000, 56,000, 50,000, 60,000, 52,000 and 55,000. Now let's go through the note. Note D. Purchases of November and December 2019 were 48,000 and 50,000 naira respectively. Note E. 75% of purchases will be paid for immediately and the balance after 2 months. Now you have working 2. They have payment to suppliers. Payment to suppliers. Now for the month of June, May, April, March, February and January 2020. January, February, March, then we have April, May and June 2020. This is for year 2020. Then you were also told that purchases of November and December 2019 were 48,000 naira and 50,000 naira respectively. November and December 2019. Let's have for December 2019 and November 2019. This is for 2019. So the purchases now. Purchases for November and December 2019 were 48,000 naira and 50,000 naira respectively. So for November we have 48,000. December we have 50,000. Then from the budgeted statement of profit or loss, we have purchases of 54,000 for January and 56,000 for February. So 54,000 for January and 56,000 for February. Then for March we have 50,000 and 60,000. March and April. March 50,000. April we have 60,000. Then for May and June, May 52,000 and June 55,000. 52,000 and 55,000. Now, note E. 75% of purchases will be paid for immediately and the balance after 2 months. 75% will be paid for immediately. Let's call that cash purchases. 75%, the one that will be paid for immediately. And the balance after 2 months. Then that means the remaining 25% now, that will be 2 months after. That is after 60 days. 2 months is 60 days. 60 days. That will be 25%. Now, the cash purchases now. We have 75% of 48,000 and that is 36,000. That is for cash. Then 75% of 50,000, and that is 37,500. 75% of 54,000, and that will give us 40,500. 75% of 56,000, and that will give us 42,000. 75% of 50,000, and that will give us 37,500. 75% of 60,000, and that will give us 45,000. 75% of 52,000, that will give us 39,000. Then 75% of 55,000, then we have 41,250. The balance after 2 months. After 2 months, a month is 30 days, approximately 30 days. Now that means the balance now, which is 25%, will be paid in 60 days after. 2 months after November, count 2 months now. You have December and January. That means the balance of this 48,000, that is 25% of 48,000. 25% of 48,000, then we have 12,000, and that will be received in January. 12,000, that will be received in January. Then for February sales, purchases, for December, 2 months after December, we have January, February. Then 25% of 50,000 now, then we have 12,500. If that says purchases was made in December, then the 25% will be, you count 2 months after December, January and February, which is 12,500. For March, for January purchases now, 2 months after January, that will be March. 25% of 54,000 now, then we have 13,500. Then for February now, which is 56,000, 25% of 56,000, that is 14,000. 2 months after February, we have March, April, which is 14,000. For March now, March purchases now, which is 50,000. 25% of 50,000, then we have 12,500. 2 months after March, April, May, which is 12,500. For April purchases now, which is 60,000. 25% of 60,000, that will be 15,000. Count 2 months after April, May, June, which is 15,000. So you sum it up. 15,000 plus 41,250. Then we have 56,250. Then 39,000 plus 12,500. Then we have 51,500. Then we have 45,000 plus 14,000. Then we have 59,000. Then we have 37,500 plus 13,500. Then we have 51,000. Then we have 42,000 plus 12,500. That will give us 54,500. 40,500 plus 12,000. That will be 52,500. Now, this are the amount that will be entered in our cash budget. Now, cash paid to suppliers. That is working two. For January, then we have 52,500. For February, we have 54,500. For March, we have 51,000. April, we have 59,000. May, 51,500. And June, 56,250. 56,250. Selling expenses are to be settled in 2 equal installments after 30 and 60 days. Selling expenses are to be settled in 2 equal installments after 30 and 60 days. Working 3. Working 3. We have selling expenses. We have January, February, March, April, May, and June. Now, the selling expenses as per the budgeted statement of profit or loss is 10,000, 12,000, 13,000, 13,000, 16,000, and 15,000. We have selling expenses as per the statement of profit or loss. For the month of January, we have 10,000. February is 12,000. March is 13,000. April is also 13,000. Then for the month of May, we have 16,000. And June, we have 15,000. That is the amount of selling expenses expensed in the budgeted statements of profit or loss. And you have been told that, then from note F, you have been told from note F that selling expenses are to be settled in 2 equal installments after 30 days and 60 days. Now, the one that will be settled in 30 days, and another one will be settled in 60 days time. The one that will be settled in 30 days, that means the following month. Equal installment, you can use half, 1/2, or you use 50%. 50%. Or you use 1/2, 1/2. The one that will be settled in 30 days, the selling expenses for January. For January 2020 is 10,000. Then, if it will be the one that will be settled in 30 days time, which is 50% of it, that will be settled in February. So you have it to be 5,000. 50% of 10,000 will be 5,000. That of February, 50% will be settled in March, and that will give us 6,000. 50% of March selling expenses, that will be 6,500. And 50% of that of April, that will be 6,500 as well. Then that of May, 50% of 16,000, that will be 8,000. Then that of June will be settled in July. And July is outside our budgeted period. Now note H. You were told that distribution expenses for December 2019 will be 5,000 naira, while selling expenses will be 8,000 for November 2019 and 9,000 for December 2019. Now let's include part of 2019. Remember, this is budgeted. This information we obtained from budgeted statement of profit or loss for 2020. Then that of 2019 now. We have December 2019 and we equally have November 2019. So the amount of selling expenses, you have been told the one for November 2019 is given to be 8,000. And that of December 2019 is 9,000. So you have 8,000, 8,000 and 9,000 respectively. Now, 50% of November will be settled in December. 50% of 8,000 will be 4,000, and that will be settled in December 2019. 50% of that of December 2019 will be settled in January 2020. 50% of 9,000 will give us 4,500, and that will be settled in January 2020. Then the remaining 50% will be settled in 60 days time. That means 50% of 8,000, 60 days, that is 2 months. Count 2 months after November, we have December, January. That means 50% of 8,000 will be settled in January 2020. So 50% will be settled in January 2020. 50% of 8,000, and that is 4,000. 50% of 9,000, and that is 4,500. Since the expenses was incurred in December, 2 months after December will be January, February, which means it will be settled in February 2020, and we have 4,500. Then the 50% that will be settled in 60 days time, in respect of the selling expenses incurred in January 2020, that will be settled in, after January, you count 2 months, February, March. That means that will be settled in March. 50% of 10,000, and that will be 5,000. That of February, 50%, 2 months after February, we have March, April. And that means it will be settled in April. 50% of 12,000 will be 6,000. Then for March, which is 13,000. After March, count 60 days. That is 2 months. April, May. That means it will be settled in May. 50% of 13,000 will be 6,500. Then for this, it will be settled in June. 50% of 13,000, that will be 6,500. That of June will be settled. That of May will be settled in July, and that of June will be settled in August. Those periods are outside our budgeted period. So let's sum it up. Now for January we have 8,500. For February we have 9,500. Then this is 11,000. This is 12,500. This is 13,000. And this will be 14,500. That is the amount that will be expensed in our cash budget. Now we have selling expenses. Selling expenses. That is from working three. January, 8,500. 8,500 for January. February, 9,500. So 9,500. For March, we have 11,000. March, 11,000. Then April, we have, for April we have 12,500. 12,500. For May, we have 13,000. 13,000 for May. June, we have 14,500. June, 14,500. That is the amount of selling expenses that will be included in our cash budget. That is the amount paid for each of the periods. Note G. Note G. We have distribution expenses. Distribution expenses are payable 1 month in arrears. Distribution expenses are payable 1 month in arrears. What do we mean by that? The one for January will be paid in February. The one for February will be paid in March. The one for March will be paid in April. The one for April will be paid in May. While the one for May will be paid in June, in that order. Now, working for. We have distribution expenses. We have January. We have February. We have March, April, May, and June. Distribution expenses for January, February, March, April, May, and June. Now, the distribution expenses given in the budgeted statement of profit or loss. For January, we have 6,000. For February, we have 4,000. For March, we have 5,000. So, distribution expenses. January is 6,000. February, we have 4,000. March, we have 5,000. For the month of April, we have 7,000. May, 4,000. June, 5,000. 7,000, 4,000, 5,000. 7,000, 4,000, and 5,000. Let's go back to the note. Note G. Note G. Distribution expenses are payable 1 month in arrears, while administrative expenses are payable immediately. Then note H as well. Distribution expenses for December 2019 will be 5,000. The one for December 2019. No, this one were obtained from the budgeted statement of profit or loss for year 2020. So for 2019 now, we have December, and that one is given to be 5,000 naira. So these are the distribution expenses for the period. Now, payment now. We were told from note F that it is payable 1 month in arrears. The one for December will be paid in January. So we have 5,000. This 5,000 will be paid in January. The one for January will be paid in February, which is 6,000. This 4,000 for February will be paid in March, 4,000. The one for March will be paid in April, which is 5,000. The one for April will be paid in May, which is 7,000. The one for May will be paid in June, which is 4,000. Since it is payable 1 month in arrears. The one for June, which is 5,000, will be paid in July, which is outside our budgeted period. It's outside our budget period. So we have distribution expenses. That is working for. So we have for January, which is 5,000. 5,000. February, 6,000. March 4,000, April 5,000, May 7,000, and June 4,000. That is distribution expenses. Then back to the same note G. Why administrative expenses are payable immediately? Administrative expenses will be payable immediately. That means administrative expenses will be paid in the year, in the month they were incurred. So we have administrative expenses. Administrative expenses. Since it is payable immediately, the administrative expenses for January is 3,000, and that will be paid in January. That of February is 4,000. It will be paid in February. That of March is 4,000 as well. It will be paid in March. So we have 3,000, 4,000, and 4,000. Yeah, 3,000, 4,000, 4,000. Then that of April, 2,000. May, 5,000. June, 3,000. 2,000, 5,000, 3,000. We have 2,000, 5,000, and 3,000. Please, if depreciation is included in any of these expenses, you are going to remove depreciation, because depreciation does not constitute a cash flow. Depreciation is not a cash flow. So I've told you that non-cash items will be excluded from cash budget. So where any of those expenses, where depreciation have been included in any of those expenses, you are going to remove depreciation from it. Now, we have taken care of everything in our budgeted statement of profit or loss. Now let's go back to the note. Note H is all about distribution expenses, and that has been taken care of. Note I is balance in the bank. Balance in the bank on 31st December 2019, and that balance is given to be 36,000, and it's an overdraft balance. So then note J. Note J, the company intends to pay the following. The company intends to pay the following. The first item there is company tax of 12,000 in February 2020. Company tax of 12,000 that will be paid in February 2020. So we have company tax now. Company tax, and that is 12,000, and that 12,000 will be paid in February 2020. So you are going to include it in February. 12,000. You include it in the month of February. So then note J2. A new generator costing 6,500 in March 2020. So the generator costing 6,500 will be paid for in March 2020. So we have generator, and it costs 6,500. That is in March. So you put it under March 2020. 6,500. 6,500. Then note J3. Dividends of 20,000 in April 2020. Dividends of 20,000 in the month of April. This is March. Then April 2020, and that dividend of 20,000 will be paid. Those are all payments made in the period. So you sum up the payments. You have the total payments. Let me have the total payments to be B. Then you now have net cash flows. net cash flows, which will be A minus B. Remember, our A is total receipts, while B is total payments. So when you subtract the total payments from total receipts, you have the net cash flows. That is A minus B. So 52,500 plus 8,500 plus 5,000 plus 3,000. Then you have 69,000. That is the total payment. When you now subtract the total payments of 69,000 from the total receipts of 96,500, then you have the net cash flows. Subtract it from 96,500. Then our net cash flows is 27,500. That is the net cash flows. Then for the month of February, you also sum up the payments. For February. We have 54,500, 54,500 plus 9,500 plus 6,000 plus 4,000 plus 12,000. Then the total payments is 86,000. The total payment for the month of February is 86,000. When you deduct the payments from the total receipts of 90,800, subtract it from 90,800, then you have the net cash flows of 4,800. 4,800. Then for the month of March, let's sum up our payment. We have 51,000 plus 11,000 plus 4,000 plus 4,000 again plus 6,500. Then the total payment is 76,500. Then you subtract the total payments from the total receipts of 89,800. When you subtract from 89,800, then you have the net cash flows of 13,300. 13,300. Then for the month of April, sum up the payment. Let's sum up the payment for the month of April. We have 59,000. 59,000 plus 12,500 plus 5,000 plus 2,000 plus 20,000. Then the total payments for the month of April 2020 is 98,500. So now the total receipt is 92,000. When you subtract the payment from the receipt, you have the net amount of 6,500 negative, because the payment exceeds the receipt. So that means the cash were overdrawn in the month of April. So because payment exceeds the receipts, the payment of 98,500 exceeds the receipts of 92,000. Then for the month of May, we have 51,500 plus 13,000 plus 7,000 and plus 5,000. Then you have the total of 76,500. That is the total payment. You now subtract this payment from the receipt of 90,900 minus 90,900. Then you have 14,400. 14,400. Then for the month of June, let's sum up the payment for the month of June. Then we have 56,250 plus 14,500 plus 4,000 plus 3,000. Then you have 77,750. When you now deduct this from the total receipts of 93,100. So you subtract it from the receipts of 93,100. Then you have the net cash flows of 15,350. 15,350. That is our net cash flows. Then you now go back to note I. Balance in the bank on 31st December 2019 is expected to be 36,000 overdrawn. Then we have opening balance. Opening bank balance of 36,000. Since it is an overdraft, so you are going to jacket it. It is a negative balance. Then after adding the opening balance, then you get the closing cash balance. Closing cash balance. Remember, this is negative, so that means you are going to subtract it. So 27,500 minus 36,000. Then you have 8,500 negative, because the overdraft exceeds the net amount you have in hand as cash. So this is the closing balance for the month of January, and that will automatically become the opening balance in February. 8,500. You know it is an overdraft, so it becomes opening balance. So you are going to subtract that from 4,800 as well. Then you have 3,700. It will also be a negative balance because this exceeds this. This closing balance automatically becomes the opening balance as well. We have 3,700. We are going to subtract it from 13,300. 13,300. Then we have 9,600. 9,600. This is cash in hand. Then this will be added to this. You know, this is positive, but this is negative. That means you are going, when you minus this plus this, so you have, then you'll be left with 3,100. Then this is cash in at bank. So this will also become the opening balance, 3,100. When you add it to this, plus 14,400, then you have 17,500. Then this 17,500 will also become the opening balance in June, 17,500. When you add it to 15,350, then you have 32,850. That is the solution to the question. Please subscribe to this channel and be expecting more from me from time to time. Then I will also like to solve further examination questions on cash budget in my next lecture. Then you should also be expecting flexible budget from me.